I will take this moment to welcome everyone on this webinar. My name is Joseline Nicholas. I am a real estate investor. I am also a broker. I got into real estate as an investor, and I've been working in this field for about 7 to 8 years as an investor, and then as a realtor for about 3 years. I came to Canada in 2011, and I came to studied a McMaster, did economics, and then graduated in 2015. We bought our first investment property in 2014. I worked for the government while we were buying properties, and I got to a point where I was comfortable to leave my job, and now I'm working full-time in real estate. Why am I sharing my story? Because I know that there are people who could be in the shoes I was in months ago. You have a full-time job, but you've always wanted to be a full-time real estate investor, a full-time, real estate professional. I want you to know that that is okay. And, if you have a plan in place, you can follow your plan and you'll get there. I'm always excited to hold webinars with you, Farhan. So I'm very excited that you're here today. I know you as an investor, you're probably one of the best investors I know from multiple angles. Not only because you're the best mortgage broker I know, but because you are also investing. You are on the ground with us. So when the market is changing, the challenges we're facing, the variable rates and how they're going up, all these challenges that investors are facing, I know you're facing them too. And I know you have the clientele who looks like us, investors, and not only investors too. I know there are people here who only have one property and they want to know how to manage that one property. So I feel like you're the perfect person to address this topic, and I'm really excited that you're here. So take a minute, introduce yourself, and I can't wait to learn from you tonight.
Thank you so much, Joseline. It's always an honor to be on your webinars. It's unbelievable. Your story is phenomenal. And I really hope one of these days I do get to interview you properly and go over your story. I would love that. And just similar to Joseline, I bought my first property in 2010. So it's been a few years since I have owned real estate. I had a full-time job like Joseline, and I accumulated some real estate. And at some point, my rental incomes got to a point where I could leave my job and I knew I have a buffer to go and do what I want to do. My passion always was solving problems, and mortgage broker kind of fit right perfectly into it, because every day you get hit with so many different problems. Each person has a very unique situation, very different set of problems, and I just love the opportunity of working with people, investors, and just kind of figuring out a solution for them, telling them something which they haven't thought about, going over more of a solution which could impact their net worth in a big manner. And I've had that opportunity to do that for about 7-8 years now. And it's been an incredible journey. And then one of the best part of my job is seeing people like Joseline who got started and they have done so incredibly well. It's hard to put words together to explain how much success I have seen, not only financially, emotionally, but also how much Joseline have grown in the last couple of years, just as a human being. And it's incredible. So thank you. Thank you once again, Joseline, for giving me this opportunity. The goal, I'm going to go over a small presentation, but my goal is today to go over as many questions as possible, cover up as much as we can. And if you are not comfortable sharing your situation with us, not a problem. Just request for a one-on-one with me or Joseline, and we'll be happy to assist you as much as we can. Quickly, let's jump into it. As most of you are aware, earlier this year, Bank of Canada started increasing their interest rate. We all knew the rates were going to go up. And to be very frank with you, I never thought they would get to the level they are at the moment. We expected the increase will happen much more gradually, but inflation, the Ukraine war, or the shortage of material, everything kind of created this challenge where the Bank of Canada had to go control inflation and increase the rate as quickly as possible. However, it seems like we are getting to the end of it. Yes, there is an increase coming at the end of this month, but I do not see a lot further increases from this point. I do see we might see some drop in the rate towards the mid or early towards the end of next year. But let's see what happens. Nobody knows for sure what's going to happen. That's just my judgment. Just working with the number of clients I work with and seeing how much higher mortgage payments are impacting them, I do expect some kind of a relief coming later next year from the government, where we will see a drop in the interest prices. So what are some of the things people are doing to cope with it? I'm also in the same situation. While some of the stuff I have done, I will cover that. And Jocelyn, I'll also ask you to share your thing because you have multiple real estate rentals. If you could explain what you have been doing for the last 6 months or so in order to cope with higher mortgage payments. So let's get into it. Okay. One of the main thing which we have seen with controlling higher payment is increasing the amortization. Most of the mortgages, when people set them up, they do set them up at 25 years. And as they pay down the mortgage, they don't realize that they have an option of increasing the amortization on your mortgage. So if you are struggling with higher mortgage payments, one of the easiest steps you can take is call your mortgage lender or call your mortgage broker and see if you can increase your amortization. A lot of lenders allow 30-year amortization. There are few of them which allow 35-year amortization. So depending on your situation, you could choose a mortgage with a higher amortization at the moment, just so your mortgages are under control. And I have personally done that. A couple of my rental properties, their mortgages came up for renewal, and I had taken those mortgages 5-6 years ago, and they were at that amortization where they were like down to like 20 years. So I pushed them right back to 30 years. And by doing that, I was able to drop my mortgage payment significantly. Again, each person's situation differ, but just to kind of share a standard issue, if you had 25-year mortgage versus a 30-year mortgage on a $300,000 mortgage, your payment could drop as much as $600 to $700 per month. And that can make a big difference, especially because the interest rates have gone up. Jocelyn, have you had a chance to experience that yourself, or have your client experienced this? Do you want to shed some light on it?
Actually, now that you're speaking, I'm thinking of a property that would qualify for this. But the beauty of that is that mortgage is locked in, so it's not a variable rate, so the payments haven't changed. So I'm lucky for that. But while you're speaking, something just clicked in my head. Somebody might be asking themselves, how do I know what amortization I have? And I just thought that most of the properties that were purchased with below than 20% down payment, they will likely have 20 to 25 years of amortization. Or I think 20, right? Like, I think that's one way to know, like, if you paid less than 20% down payment, your amortization is going to be lower.
Yeah, 25 years or less, right?
Yeah.
And that's another thing. Just because you made 5 or 10% down payment when you bought the property, if you bought it a couple of years ago, it has more than enough equity now that you have 20% equity in it. So you could change your mortgage tip. Again, you have to contact the professionals so we can take a look into it. Every scenario differs. Believe it or not, every lender differs. There is 3 lenders I work with, which it's so easy to change amortization that you make a quick call and they just change the amortization. But then there is lenders who require you to break their mortgage, set up a brand new mortgage to go to a 30-year mortgage, right? So it differs lender to lender. Please reach out to a professional who works in this field and see if you do qualify for this option, and they would be able to assist you with it.
Absolutely.
We'll go over another option, interest-only mortgages. Not very popular, but they are there. And there is a lot of lenders who do offer them. There is also home equity lines of credits, which also provide the same option. Generally, the interest rate on this is a little bit higher than a regular mortgage, but the benefit is you just pay interest. So I'll give you a scenario which I had an opportunity to set up for one of my clients. I have a retired client and she took a mortgage 2 years ago. With her pension income, she was having very, very difficult time affording the increase in the prime rate and the payments on it. So I did take a look into her scenario, and she has a lot of equity inside her home because she has been paying her mortgage for years, but she was having difficulty with having a full mortgage payment. So one of the solution I discussed with her was that we could set up an interest-only mortgage, and she was perfectly fine with it because in her case, all she want to do is just make sure she stays in this home as long as she can. She has been in the property for long period, and interest only payment would help. Like her payment dropped almost from $1,900 a month down to $1,100 a month just by making that change and going to interest only payment. Yes, she was at I believe 5.15%, and with going with interest only mortgage, her interest rate went up to like 5.9%, but her monthly payment became so much less. And depending on your situation, that might be the right option for you. I also know a lot of investors, especially on their rental properties, they have no intention of ever paying them off. So they choose interest only mortgages on them. It's a lot easier. The payment is less. And if they have extra cash, they have the ability to put that in the mortgage, and they set up that mortgage and go accordingly. And then they write off all of that interest they have paid on the property against the rental income they are collecting. So it really helps people in a situation when they're having difficulty paying that principal and interest to go into interest only mortgages. And again, if you want to inquire about them, give us just let us know, and someone from my office will be in touch just to make sure we can set up an appointment and see if this is a viable option for you. Joseline, again, I know you deal with a lot of investors, right? How has your experience been with interest only mortgages?
So I have a client who took an interest only mortgage for land. So they were buying land that they have to develop, and they need all the permits, and also to hold the land, they needed interest only payments, mortgage, because the land is not bringing in anything. They have no revenue, but they can manage to pay the interest over time. So that's what they did.
Yeah, it's a great option for that. It's also a great option if you have multiple mortgages.
Yeah.
It's also a very good option for people who are self-employed and they have commission incomes. Some months they get paid a lot of money, some months they get paid very little money, and there is some months when you don't get paid anything, right? So for those people, when there is no money coming in, they can pay the least amount of mortgage, and when they have a lot more money coming in, they can dump that extra money into the principal to pay off their mortgage as quickly as possible. So again, circumstances vary. Like if you have a 5% down payment and you're buying your first home, can you have an interest only mortgage? No, that's not possible. But if you have a lot of equity in your property and you do have good income, there is lenders who will definitely entertain the interest only mortgages. Okay. Jumping on to the next option, home equity plan. Okay. So most of the lenders offer home equity plans where there is a mortgage / line of credit. As you pay down your mortgage, the line of credit is available to you. You do have the ability to take out the money from the line of credit right away and use it for whatever you desire. In this case, maybe next month's mortgage payments if you are having difficulty. And a lot of the lenders do allow their mortgage to be converted into a home equity plan. Each lender call it a different thing. RBC calls the RBC Home Line Plan. Scotia calls it Scotia Total Equity Plan. They are similar and they also have differences depending on the lender, right? So again, you have to reach out to your professional and see if you qualify for that, and see if that can temporarily, while the interest rates are high, or if they stay at this level for the next year or so, if you are running into a deficit and you are having difficulty affording that, maybe you can use some of that home equity line of credit to compensate for that shortfall. And again, especially if you have a rental property, the interest you pay on your line of credit and mortgage, both of them you can write off against the rental income you're receiving. So it is a win-win in that situation. Circumstances vary, right? So again, each person's situation is different. So do contact and see if we can get that set up for you. Okay. Joseline, I know you have had those plans in the past, and I know you have a couple of them currently. How's your experience with them? If you can share it with us, please.
So I do love having a line of credit. And the beauty of that is, you can tap into it whenever you need it, right? We've had it where, it's completely paid off. We don't have to worry about it. But then sometimes you get into a situation where maybe you're doing a renovation and the renovation takes longer, it costs more. You don't have any other money, you turn to the line of credit. So that's how we've been able to use those. But I also have clients who've been able to use these to buy other properties.
Absolutely.
So, yeah.
Absolutely. So they work out extremely well, again, depending on your circumstances, how they're working out. But they work extremely well in most
Yeah,
circumstances.
absolutely.
Again, there is a disadvantage of them. I had a client few years ago who came and he was very upset because he kept on taking out the money from the line of credit every single month. And after 5 years, he realized that he hadn't paid any money into his mortgage. So you have to use them wisely, right? You cannot, this is an option available, but if your goal is to pay off your mortgage, that's not the way to go. That jumps onto the other side of it. One of the things which I'm seeing people do more and more, right? And that is going into multifamily homes where they're living in one portion and renting out their basement or renting out an apartment and generating some income to help with those mortgage payments, especially people who have unfinished basements and they don't utilize them. There is such a big demand at the moment from tenants. Even though real estate prices have taken a bit of a hit, there is more tenants than ever, and they're willing to pay higher rent at the moment, just because there's not a lot of properties available on rent. So there are solutions I have seen lately where, you know, people have a spare room which they are renting out. They are renting out their basement apartments to generate some extra income, to compensate for higher mortgage payments. Just some creative solution at the moment, while either the income goes up or you have the ability to drop that mortgage payment. A lot of people are taking advantage of it. Airbnb and those services used to be a big no-no a few years ago, but finally the home insurances, they are accepting it. Home insurance, most of the companies they are accepting it. A lot of mortgage lenders, they are getting finally okay with Airbnb. So again, depends on your situation, but that is a wonderful tool available right here at your home, which you can utilize to generate some income. Again, going back to you, Joseline, I know how much you love multifamily homes, right? What is some of the benefits you have seen over the years owning multifamily homes and helping people acquire those assets?
So definitely with multifamily homes, if you're an investor, you get more cash flow because you have 2, 3, or more families living in the property. Even if one of them moves and you have a month of vacancy, it's not too bad because you're collecting rent from 2 or 3 other tenants. So that's good. But I've also helped clients get homes that have an accessory apartment. I've had families that come to me and they say, we can't afford a mortgage, or maybe we just had a baby who's now going to daycare and we need an extra 1,000 or 2,000 a month. And we look at their home and figure out if they have an apartment that they can rent out. If they don't, we've had to say, okay, we need to change homes here. So they will sell their home that doesn't have an apartment to buy something that has an apartment, with the goal of renting it out for an extra 1,500, and that becomes the extra 1,500 they need a month. So it's definitely, and we've had, like where I've lived in the different homes we've been in, we've had accessory apartments, so it's definitely a tool that cannot go unnoticed.
No, you're absolutely right.
Yeah.
And me and my wife, we have always had in the past people in our basement who shared some of the mortgage payments with us, and it works out quite well. So again, if you are in a position where you do have an apartment, or if you have unfinished basement, do get in touch with especially someone as like Joseline, to see if you could possibly convert it into accessory apartment. If you are in a situation where none of these options are working out and you need to possibly rent out your sell your property and move into another property where you do have the ability to generate some income, you can do that. I have a story to share with everyone. I had a client a year and a half ago roughly, and when the COVID started, both husband and wife, they lost their job, unfortunately. And what they did with their home was that they built their basement as quickly as possible. Both of them were a little bit handy, so they did most of the work themselves. They moved into basement and rented out upstairs of their home, and the rent upstairs was sufficient to cover their mortgage and their property taxes. So again, nobody wished to do that, but if the circumstances come to that and you have a accessory apartment or a basement apartment, you could possibly do it. And then later on, both of them were able to get a job, and what they end up doing was they rented upstairs and downstairs and bought a separate property for themselves, right? So when you make small sacrifices like that, there is more financial rewards which you can take advantage of. Going into it, there are other things you can do if you are truly having difficulty with paying your mortgage payment. I have helped a bunch of my clients with lenders to provide them a credit facility to temporarily provide a relief if you are struggling with your mortgage payments. Could be setting up a line of credit, could be setting up uh, just doing interest only mortgage payment with their existing lender, or setting up a completely separate unsecured line of credit for a few months so they can either increase their income to support the higher mortgage payment, or look possibly sell the property, right? Give them that buffer room to do that. And what we saw, one of the reason which people are struggling at the moment is they bought properties which were bigger than they could afford, right? And as a result, now they're having difficulty making those payments. And sometimes it seems like the worst option in the world to sell your home and downsize into a small home, but sometimes that's the right option, right? You get rid of that large mortgage payment stress and you get into something which is much more affordable. So those are some of the solutions, at least in the last 4 weeks, I have helped my clients with. None of these things is something which I have read in a book or something like that. No, all of them have physically been done with clients, including myself. I've taken advantage of a couple of them. Joseline, I know you have taken advantage of a couple of them.
Mhm.
So that's pretty much where I'm going to conclude, okay, on what can be done in terms of your higher mortgage payments. And I'm going to open up the floor for questions. And the goal today is to take as many questions as possible so we can help people, especially with their own situation, and hopefully their situation can help other people to come up with more solutions and
Mhm.
see how they can afford these payments. On to you, Jocelyn.
Absolutely. Thank you. Thank you. So we did have questions that were submitted ahead of time. So we'll start with those. But in the meantime, if anyone has a question about anything you say today or anything specifically, they can post it in the chat box and I'll get to it. I'll ask the question on their behalf. So coming back to the questions that I have right now, the first one is, does it make sense to shift to a fixed mortgage right now?
No, not in my opinion. Now, circumstances vary from person to person to person to person to person. The reason I'm stating that is our interest rates are all-time high. And at that point, you don't want to lock yourself in right at the top of the market or closer to the top of the market where we are at. If you are truly having difficulty paying your mortgage, your fixed rate is not going to be too different from where you are at right now. However, if you stay variable, what I believe in the next year or so, 1 to 1.5 years, the interest rate will slide down. And what will happen at that point is that you would be able to lock into a much more cheaper rate. That would be the time to lock in. Earlier this year, especially if you had your principal residence and the rates were extremely low, we could lock you in, but this is not the right time to lock in your rate.
Okay. Alrighty. So for those who are on variable, this is for someone who's buying today. Do you think then variable would be the best choice for them, or should they try to do like a 1 year or 2 year fixed? What do you think for those who are buying now?
It depends on each and every single client situation. Um, Personally, I'm a very big fan of variable rate mortgages
Okay.
myself, right?
Hmm.
All of my mortgages are variable. However, it depends. Again, each client has a different and unique situation, right?
Yeah.
And do keep in mind there is lender who provide hybrid mortgages where you could have a variable rate mortgage, but your payment does not go up. It's just your amortization
Yeah.
keep on increasing if there is an interest rate hike. So for people who have difficulty affording, that might be a better solution when we are setting up a mortgage. Again, I have set up mortgages for client for just 1 year fixed, 2 year fixed, 3 year
Yeah.
fixed. Everyone is different and everybody is unique. But especially with the first time home buyers, one of the mistake I have seen over the years is that they lock in their mortgage, and after a couple of years, for any reason, if they want to break their mortgage, their penalty is
Yeah.
ridiculously
20,000.
rich. Oh no, I was dealing with one not too long ago, 69,000 something, so 72,000, something like that with everything
Yeah.
in. I remember selling my home and paying $35,000 in penalty. It
Oh,
was insane.
yeah.
So again, I completely understand the frustration and the fact that you do want to get that peace of mind with going with fixed rate mortgage. But the reality is also that a lot of people, I know Jocelyn moved into a home like 4 months ago, not even 3 4 months ago, and the other day we were having a chat, and she's like, if I find the right property, I'm gonna move again, right?
I know.
um,
I love moving.
no, you
An
don't love more.
occupation hazard. I see
It's
homes every day.
that same thing with me and my wife. We have moved so many times that it's difficult to keep a count on at the moment.
Yeah.
It's just you see something and you want to be in a position where if you have the finances, why not take
Yeah.
a jump and go into that option?
Yeah. No, it's true. It's true. Now, second question is, I think this comes from someone who has a lump sum of money in the bank account. They're wondering, should they pay that lump sum towards a mortgage or should they use it to buy an investment property?
It depends. Sorry. I wish I could give you a more clear answer, but it really depends on the life stage you're at.
Mhm.
It also depends on how much income you're bringing in on month-to-month basis. And it also depends on your risk tolerance. The rule which me and my wife, we have followed, anytime we save enough money to do a 20% down payment, we go out and buy another property.
Yeah.
Okay. And it has worked fine for us, but we are at starting point of our life. There is still a lot of working years left. So if mortgage payment increase, if the tenants move out, we just have to work a little bit harder, and we are able to afford that.
Yeah.
But a lot of people don't have that option. If you are at older stage of your life and you only have this small sum of money, you don't want to put it right back into real estate market and not have the ability to afford the rental property.
Yeah.
Again, depends on the lump sum money, right? Like I had a call from a client a couple of days ago, and she was telling me that she got close to $7.5 million sitting in her bank account. What should she do? Like, my thing was just at least pay off your mortgage, right?
Yeah.
Like, so you don't have to pay interest on your mortgage. She
Yeah.
was getting concerned, oh, my payment is going up, this is happening. I'm like, why to even bother about it? You have the
Yeah.
funds, pay off your mortgage, right? But each person's circumstances differ. I had a single mom called me last week, and she got $25,000 from one of her relative who passed away, and I had to tell her to keep that as a safety buffer in her bank account, just
Yeah.
because she's having difficulty paying her monthly mortgage payments. I don't want her to pay a lump sum payment in her mortgage. Her payment's going to remain the same, and she
Yeah.
did not have an emergency fund. So my big thing was this: please keep an emergency fund, and just make sure that you, in a scenario you don't have enough money to cover your mortgage payment, you can tap into it and cover your mortgage payment.
Yeah.
um,
That's smart.
each person has different situation, different
Yeah.
concern. I had a student call me who had won $100,000 in different grants and scholarship, and he didn't have income and he wanted to buy a property. And I had to tell him, I'm like, just keep the money with you right now
Yeah.
until you graduate, and then use that money towards down payment, right?
That's true.
But again, so if you have lump sum amount of money sitting, do consult a professional and see and choose your option. All they can really give you is recommend you should look into this option, this option, this option. You should study all of those options and do what's the right thing for you to do.
Yeah. Yeah.
We'll
No,
conclude here.
that's perfect. So we have a question from the audience. And it's, if you do interest only mortgage, how much percentage of interest can you write off?
As of my knowledge, again, check with your accountant. You can write off 100% of interest on it, as of my knowledge. If it is
Mhm.
associated with that specific property, you can write off all the interest.
Yeah.
But please, I'm not an accountant. Do check with an accountant and make sure in your circumstances that's applicable. I had a client who ran into a problem where he had bought a property for $200,000, and that property had turned into like $1.5 million. I don't know how, but it was like 10, 15 years had gone by, and the property had, and he put like $1 million interest only mortgage on it. And CRA did give him hard time because he was writing off a lot more than what he had originally bought the property for.
Yeah.
And yet, on the same time, I have clients who have had interest only payments for 6, 7 years and have had no issues at all. So do check with the
Yeah.
accountant and see how they can best assist you in this. This is more of a taxation question.
Mm-hmm. Yeah, totally. The next question is $1 million question. So it goes like this. What do you think will happen to rates in 2023?
I wish I had the answer. I'll be sitting somewhere in Mexico and having fun.
Yeah.
Uh, this is what I feel like. We would see one or two further interest rate hikes. And towards the mid to end of next year, I think we're going to start seeing drop in the rate. Okay. It's not, I personally feel with the number of calls we get, people who are struggling with the higher mortgage payments, that this is not sustainable, right? And
Yeah.
when people start taking their keys and start returning it to the banks, government is going to take a step and drop the rate. And that's
Yeah.
already, if you take a look into listings, for the last 2, 3 years, we didn't really see any power of sales, which is also not good. You're supposed to have some people who are not able to pay their mortgage, and power of sale need to naturally come on the market. It's just the real estate market was so hot that anybody who was getting behind on their mortgage just put a for sale sign and was able to get rid of their home right away. But now it's finally
Yeah.
happening that we are seeing more and more power of sale. We are seeing bank sales popping up. We are seeing, those motivated sellers popping out of the on the realtor.ca. I've been getting calls where people are like, I have a property and I need to get rid of it. Can you get an investor and see if we can get that taken care of? We are seeing more and more of that.
Yeah.
So as that continues, I do see at some point Bank of Canada is going to do the right thing and they're going to start dropping the rate. It's also the fact is that inflation is finally coming in control. Like the numbers which were 4 or 5 months ago, the numbers were so high that they had no choice but to raise the rate. But
Yeah.
it is dropping. It's going in the right direction. Once the inflation is controlled, I believe the interest rate will start coming down.
Yeah. No, that's true. So the next question is very similar to the one we answered about someone who has a lump sum of money and they want to pay towards the mortgage. So I would say probably for this person, they should reach out to you because they're giving me specifics. They have a joint mortgage of 500,000. They're going to
Okay,
save up
let's run through the question. Don't give me their names. Don't give me anything. Just give me the numbers and see if we can.
Okay. So the question goes like this. My partner and I have a joint mortgage of 500,000 and I might be able to save 70,000 by the end of next year. Should I pay part of our mortgage to reduce the burden?
If you have an emergency fund in place, and it's not difficult for you to pay your mortgage, absolutely pay it.
Yeah.
And I completely get it. Mortgages are very painful. The payments are very high. I have multiple clients who have paid off their mortgages in under 10 years.
Yeah.
Okay. People do it, and it happens all the time if you're focused and your goal is to get rid of your mortgage.
Yeah.
And that opens up a lot of opportunities for people, because once your home is free and clear, you have the ability to do things which you don't have the ability to do when you have a mortgage on your home. Right?
Yeah.
You can take a little bit bigger risks because your home is free and clear. So yeah, if you and your partner have that ability and you don't see any hiccups coming up, by all means. And another thing which sorry, Jocelyn, taking a bit of your time, but
No,
going
it's
into
okay.
the
Take your time.
conversation, when you do put a lump sum payment in your mortgage, a lot of lenders do allow you to reduce your mortgage payment. So let's imagine if you have a $500,000 mortgage, the amortization is 25 years, and you throw in the same situation, the $70,000 into your mortgage, your payment from $2,200 to $2,300 a month you could request your lender to reduce that from 2,300 to maybe about $1,500.
Yeah.
And it does give you that flexibility.
Yeah. Yeah. No, that's absolutely true. And I think I've seen some of my clients do that, especially those who are looking to pay off their mortgage quickly. They've had to, maybe they sell an asset or they have savings and they pay off the mortgage.
I have especially seen that with people who are planning to have kids.
Yeah.
So when you have a kid, obviously one of the partner is not able to work. And yes, you do get compensated by EI and your employer, but it does take, having kids is expensive. As me and Jocelyn, we both can relate.
We know
So
it.
I have had a bunch of clients who, when they were planning to have a kid, they worked really hard for a year or two, saved up a bunch of money, threw it in their mortgage, reduced their monthly mortgage payment, and then they had a kid. Just
Yeah.
so while, one partner was not working, there was not a lot of burden to pay those that higher mortgage.
Yeah. The next question is, what is a reverse mortgage?
Great question. Reverse mortgage is what exactly it sounds like. Instead of you making monthly mortgage payments, the mortgage lender sends you a check every single month. So it works very well for people who are in later stage of their life. It's generally for people who are 55 years or older and they have a lot of equity inside their home. So what lender does is, let's say if your home has a $200,000 mortgage and there is $1 million valuation of your property, they will put a reverse mortgage on it. So on top of the income you are making, you will also get $1,000 or $1,500 on monthly basis coming into your home. That would continue up until you hit pretty much about 65% of the value of the property. At that point, they do stop. But it really works out for people who have very low incomes and they don't want to sell their property. Instead, they want to stay in the property as long as they can. There is a lot of negative opinions about reverse mortgage, but it's a great product for the right person. Especially that senior person who wants to stay in the property and they do have the equity and they don't want to sell the property, they want to keep the property. It works out extremely well.
Yeah. Is there a chance that this person could be kicked out of their home, or once they get to, let's say, 65% of their home value, what happens then?
Circumstances to circumstances to circumstances, right? Can they be kicked out of their home? Yes. What is the probability? Probably next to nothing, right?
Yeah.
Because the lenders, they would keep the mortgage at 65%. They're not losing anything,
Yeah.
right? Because there is still 35% equity built into the home, and just not pay those monthly payment, right?
Yeah.
Sometimes, selling the home is best option.
That's true.
I did a reverse mortgage for a gentleman 3-4 months ago, and what was happening was his wife had passed away, um, and it was him. He lived in this condo which he absolutely loved, and he only had like $30,000 left in the mortgage. But with the medication expense, with all the expenses at his age, he was having difficulty paying his mortgage. And the other thing was this: he was expecting a heritage in 3 years, which was going to be over $1 million. So the reverse mortgage just made a perfect sense for him, that while he's going through this period, he was getting $1,500 on top of his pension income, so he can enjoy his life. And when that heritage came, he would be able to pay off the mortgage completely. I've had also a couple who couldn't afford their home at all. That was just no possible way they could afford their home, but their home was paid off and they did not wanted to move into a retirement home. They were very happy and they wanted to set up a reverse mortgage, and I did that about 6 months ago for them. Again, the goal was for them, once one partner passed away, they were going to sell the home, pay off the mortgage, and the other partner will move into the to old age home, right? So again, circumstances vary from person to person to person to person,
Yeah.
but sometimes it works out quite well. Most of the time when people call me for a reverse mortgage, my answer is, I'm sorry, this is just not the right product for you. Because
Yeah.
people just wanna, like, I had a 30-some-year-old client call me, and he wanted to the house was paid off, and his father left the property to him, and he wanted to set up a reverse mortgage so he doesn't have to work for the next 20 years. Great plan, but it doesn't really make sense to do that. I'm like, if that's what you want to do, please sell the property, buy something or rent something, and you can live off that. Reverse
Yeah,
mortgage is not the right option for you. um, and there is a lot of due diligence lenders have to do in order to provide that product. So again, if you want to know more about it, give me a call. I'll be happy to go over the details.
absolutely. The next question is, does changing amortization mean my rate will be revised?
Yes and no. Depends the kind of mortgage you have, depends the kind of the lender you are with, and how your mortgage was underwritten at the time you took it. A lot of lenders will just increase the amortization and not change the rate. There are some lenders, especially if you have had an insured mortgage, which means if you made less than 20% down payment at the time of the purchase, they might have to change the product. But again, give us a call.
Yeah.
So we can look into it and advise you accordingly.
Perfect. The next question is about interest-only mortgages.
Mm-hmm.
So someone is asking, would you suggest interest-only mortgages for only investment properties? They're asking because they have 20% down payment for the next purchase, and they're wondering if they can set that up as an interest-only mortgage.
No, sometimes interest-only mortgage is a perfect solution for principal residence. It depends at the life stage you are at. I had a client a couple of years ago who wanted to go and get a master's done, and I changed his mortgage to interest-only mortgage on that time and pulled out some equity from his home, just so he could go out and do his master's. For the next couple of years, his expenses were going to be much higher, and there was going to be very little to no income. So interest-only mortgage worked out quite well. On rental properties, sometimes it's a great solution and sometimes it's a terrible solution. So again, circumstances matter, right?
Yeah.
So if you are in a position where you keep in mind, interest-only mortgages are much more expensive than a regular mortgage. So sometimes it's not the right product. Sometimes it's the perfect product.
Yeah. No, those are all the questions I had. Thank you very much for taking the time to answer them. If anyone else has any questions, you do have like 20 seconds to post it in the chat. If not, then I'll conclude that these are all the questions we have. I always appreciate you coming and talking. And I feel like what I've learned today is definitely something I'm going to use for clients, because this is not an easy time, especially for people who have variable rate mortgages. So I'm excited that I could take some of these and have conversations, bring them back to you, because, you probably will be able to give them, more detailed answers. But I see a question, I think, about a recording. So I'll get to that. But yeah, no, I just wanted to say thank you so much for coming, because these are conversations that must be had. And I find in most cases, at least with my clients, they don't know who to talk to. Some of them will talk to their families, but most families don't talk finances. So it's good that we can come here. We can ask you these questions. You're an expert. You do speak to a lot of people on a daily basis, and you do provide solutions. So I am so thankful that you were here tonight to answer these questions.
No, Jocelyn, it's absolutely a pleasure being here. And I love doing these with you because, yes, it's so much learning for me every time I speak with you, and so many different sides of the picture I get to see. So thank you for giving me this opportunity. And again, if you do feel like you're in a hole and you're stuck, please reach out to Jocelyn. She, at least, if not, she's not able to fix your problem, she can at least guide you into someone who can fix the problem.
Absolutely. Absolutely. For someone who's wondering if this is being recorded, yes, it is being recorded. And we usually post our recordings on our YouTube channel. That is one way to get access to it. So you can go to YouTube and search Joseline Nicholas. You could also find recordings of previous webinars. We will also send an email to all the attendees with a link to the recording. So if you'd like to go back and take a look at something, or listen in on a question that was asked but you didn't catch it, you can definitely do that. So for everyone who was here, thank you very much for taking the time to be here. We do appreciate you. And if any of the questions you asked, or if we didn't address your question specifically, because I know there are people who have specific situation, and Farhan said it depends on the situation. So I think maybe what that means is we need more information to make a recommendation. Feel free to reach out. That's why we're here, providing solutions. Unless there's any other questions, I will just say have a lovely evening. And I hope that what you've learned today will help solve some of those challenges you're facing as investors, but also as homeowners.
Thank you. Thank you, Joseline. Thank you, everyone. And have yourself a wonderful evening. Take care. Bye.
Take care, everyone. Good night.
Good night.